Hello everyone, thank you for joining us. I'm Jerry Lewis and I'll be your host for today's webinar. Today we have a live webinar with Denise Dias. After the webinar, there'll be a live Q&A with Denise where you'll have the opportunity to ask questions about her presentation. We're going to start today's webinar with some opening remarks from Babak Abbassadeh, CEO of Toronto Centre. Welcome, Babak.
Thank you, Jerry. Dear participants, I am Babak Abbassadeh, CEO of Toronto Centre. The rapid rise of FinTech and digital finance presents many opportunities not only for advanced economies, but also for emerging markets and developing countries. This includes expanding financial inclusion, the entrepreneurial and economic empowerment of women and girls, and poverty reduction in line with the UN 2030 Sustainable Development Goals and Canada's Feminist International Assistance Policy. Last October, Toronto Centre organized an executive panel at the IMF World Bank annual meetings called FinTech, a game changer for financial inclusion and gender equality. I encourage you to visit our website for more information. However, amidst all the excitement, there are also important questions. Central bankers, financial sector regulators, and supervisors need to balance carefully efficiency and stability and cybersecurity trade-offs in the face of these rapid technological changes. The forces that affect the financial system are constantly changing, and supervisors and regulators must adapt with them. Therefore, we are once again at the forefront of looking into how to keep the financial system stable while harnessing the benefits of FinTech. This is especially important given that the existing supervisory policies, procedures, and resources may no longer be adequate to address the fast-changing landscape. Toronto Centre will be offering educational resources for supervisors and regulators on these issues through courses, webinars, and other opportunities, including today's program. In this program, we have a special speaker to help us make sense of this complicated landscape. It is my pleasure to introduce our longtime program leader, Denise Dias. Thank you, Denise, for joining us today in our live webinar. I hope you enjoy the program. Thank you.
Thank you. Good morning, everyone. Thank you, Babak. I'm very glad to be here. Thanks, Toronto Centre, for inviting me. Thanks, Demet, who organized the webinar. So thank you for being here. We have many people from many countries, mostly regulators. I think we have all the continents, or maybe most of the continents. So I'm very glad. We have a long presentation before we can start with the questions. So let's get started. So first of all, I want to start with, can I change this? Yes. So do we remember Tom Cruise in the Minority Report movie? Tom Cruise was a detective in 2053, I think, and he was able to arrest criminals before they committed the crimes. So it was a predictive psychic technology that requires some poor girls to be living in a swimming pool all the time, connected to wires and computers. And I want you think that you're Tom Cruise and imagine what could you do if you're a regulator and supervisor. But first of all, I want you to think and tell me if you think this is too weird. So if you have a place to answer this question, it's a poll. You're gonna see a poll place in your screens. Do you really think that Tom Cruise has anything to do with supervision? Or do you think this has nothing to do with financial supervision? So most people are answering that they think yes, they think this has nothing to do with financial supervision. This is actually the response I expected. Because one ask for this webinar is actually for you to keep your minds open, get out of a comfort zone, and think about possibilities, because we're going to talk about regulation and supervision in an age of technology. So predictive analytics and acting preemptively, these are not really futuristic things. These are things that our financial supervisors are starting to test and pilot. Maybe not as exciting as the Tom Cruise dashboard, but new technologies are being used for financial supervision. So keep your mind open. And the idea of this webinar is for you to not hide yourselves from what's happening in the world, because there is a fintech revolution going on, and a fintech revolution and also the technologies underlying this fintech revolution can mean a lot for financial supervision and also for regulator. So maybe we are not in a world where you can act like Tom Cruise, but we are definitely in a world where you can rethink your approaches to financial supervision. So it's not a time to ignore what's going on. It's a time for you to take advantage and then also see the risks and analyze the risks of this fintech revolution. So our agenda for today has 6 points. And we're going to first start with explaining a little bit of the context, the broader background for this financial technology revolution, the fintech revolution. Then we're going to briefly talk about the key technologies that underline this financial revolution, the impact for the regulators and supervisors. And then we're going to finish talking about how technology can be used to advance the purposes of the financial supervisors and regulators through the RegTech and SupTech niches of fintech, and end with some initiatives that you can adopt to foster and encourage the fintech revolution while measuring, identifying, and monitoring the risks of the fintech revolution. One thing that I would like to clarify for you is that I'm not a tech person, so we are not going to go in depth into the technologies. We're not going to go in depth in a compilation of the RegTech or SupTech solutions that are out there. So this is only to frame the discussions, to help you think about these issues, and to help you think about how to change regulation and supervision, and mostly supervision, given what is happening in the world. So this is our agenda for today. You can have the opportunity to make the questions in the Q&A box. I'm not going to be answering the questions during the presentation, but we have other people here helping me, and we're going to go back to the questions in the end of the presentation. So first of all, the fintech revolution. What is, if you think about the post-crisis, the crisis that hit the global financial markets starting 2007, 2008, after that crisis, we had a lot of very important regulatory reforms at the global level and overseen by the standard-setting bodies like the Basel Committee, the Financial Stability Board, and also the country national regulators. So a lot has been done, and it is still being implemented in terms of change the regulatory framework mainly for international banks, for large institutions, large investment banks, large commercial banks, insurance companies, but also things that are affecting retail banking and smaller institutions around the world. Also, with this reform of the regulatory framework, we've seen a rethinking of the approaches to financial supervision and the effectiveness of these approaches. So a lot of the countries were focused on risk-based methodologies for supervision of banks and other financial institutions. But how could the financial supervisors miss so much? Did they miss? Did they not see the data? Did they have the data in the first place? Did they understand the data? Or did they have bad data? Were the financial institutions actually not giving them enough data or the right type of data? So there are many questions in terms of the effectiveness of these approaches to supervision. So this was also happening. And at the same time, many financial regulatory authorities and supervisory authorities were also expanding their mandates, not only because of the crisis, but also because of other global pressures, such as the pressure for them to also act on competition, also act on consumer protection and financial inclusion. So expanding their mandates, expanding the pressure over their resources, to look at other areas of policy making in the financial sector. And last, the structural changes in the banking industry are also important to take into consideration, because the banks, they were shifting away from, and they are still shifting away from, risky areas such as trade finance. They are reducing their international portfolios, especially in emerging markets, low-income countries. So these things are changing the financial sector industry, and they are changing the choices for consumers and companies around the world. At the same time, the most important change in the global environment that I would like to highlight here today, and what is the main issue of our webinar, is the FinTech revolution. So you can see the robot there from that very funny cartoon, TV cartoon, Futurama. And the robot is saying, time to rebalance your portfolio, because this is already something that's happening. Robo-advisors for your investments are things that are already out there, and they are based on technologies that we're going to discuss on artificial intelligence, machine learning. So these are decision-making, computer-based technologies. They are in a way substituting human-based advice in financial sector. So it's the rise of the FinTech world. And what is FinTech then? For us to understand what we're talking about and understand the risks and the opportunities, I like to simplify what FinTech is. First, starting with this very simple definition by the Financial Stability Board. FinTech is technology-enabled innovation in financial services. But we know that this definition is very, very limited. So what about talking about the elements of this definition? So it's about new businesses, new business models. It's about new technology, of new uses of technology. And it's about new products and new services. So this is FinTech, right? FinTech is happening everywhere. In terms of businesses and business models, it's important to focus on the fact that most of FinTech is actually non-banks. It can be small FinTechs, it can be large ones. So you can have even giant technology companies working on FinTech nowadays. The curious thing and the particular thing is that these institutions are mostly not regulated by financial supervisors. The new business models is also important to take into consideration, because they are not based on the traditional business models that banks and large insurance companies and investment banks adopt, and the regulators are used to those business models. So these are new approaches to businesses, a lot of partnerships, and a lot of innovation in terms of organizational structure. In terms of new products and services, although mostly they attend to traditional functions in the financial sector, such as savings, investments, credit, transfers and payments, there are new types of services being offered. And I put a picture here of the cryptocurrencies. There are many cryptocurrencies nowadays, and there is a lot being talked about cryptocurrencies, which started with Bitcoin, which is the first logo there in the slide. So this is FinTech. It's new types of institutions, new types of business models, new partnerships, new products and services. But also, FinTech is about technology, right? So, and the technology we will be talking about more in this presentation. But it's really about using technology in creative ways, in innovative ways. So digital technology is the core of FinTech. It's new technologies and new uses of old technologies. Mostly it's new uses of old technologies. And I'll explain more about this. In addition to the technology, the really, really core of fintech and financial innovation nowadays has to do with data. So digital data, a flurry of data from all kinds of sources are becoming available to financial services regulators, to financial service providers, infrastructure providers, all kinds of data. And it's not only about reported data from financial institutions, it's about data that is being flowing on the internet, social media data, big data. It's big, it's different, it's high velocity, it's varied, so it's a lot of types of data, and it's also a big volume of data. It's the 3V of data. I don't know if you have heard about that, but it's the big 3V of data. So these are the core things about fintech revolutions, about the technology, the business models, and the data behind the business models and the technology. So let's talk about a little bit of the key technologies. I'm not, as I said, I'm not a tech person, but I can talk a little bit about it. And if there are tech persons in listening to this webinar, and if there is anything that I say wrong or any questions or any clarifications, you are welcome to write in the Q&A box. So I'll start with this one. And I'll start with a question for you. You can ask, you can answer me in the box. So, do you use machine learning? So let's see if you think that you use machine learning. So most people are saying no. No, I don't use machine learning. Around 35% are saying yes, I use machine learning. But still the majority are saying that they do not use the machine learning. It's curious because I'm sure that most of you use machine learning on a daily basis. For example, if you use these mobile apps, if you use Google, if you use Amazon, if you use Facebook, if you use LinkedIn, if you use Uber, you're actually benefiting from machine learning. And one of the objectives of this webinar is really to raise awareness of how widespread these technologies are. So when we talk about machine learning and artificial intelligence, most people tend to think that these are Tom Cruise stuff, right? Things of the future, things that are not close to us, but they're closer than we think, and they are being used in the financial sector already. So these are not the future, these are actually the present. So if you use any of these apps, you are using machine learning, you are benefiting from machine learning on a daily basis. What is machine learning, by the way? So machine learning is a technique for who knows in the future achieving artificial intelligence. Artificial intelligence would be that future where the robots and the computers would behave like humans, like in the movie 2001, The Odyssey, where, what is the name of the robots? HAL took over and dominated the humans. We are far from that, but we are using our concepts of artificial intelligence, and machine learning is improving day by day with the flow of data that's coming everywhere, and it's being used every day on many applications within and outside the financial sector. It's pretty much using algorithms to make analysis of large data sets without the interference, without the coding by a human. So instead of having a human telling the computer how to analyze the types of predictions to make, the computer is generating these algorithms. Algorithms are nothing else than if-then statements. So if this happens, then I'll do this. If that happens, then I'll do this. So in a machine learning application, the computer does that based on large sets of data. So the machine learning applications, the quality of these applications depend on the quality of the data. The more data, the more analysis of these patterns in the data, in these trends in the data can be done by the machine, and then the better or the worse the algorithm becomes. There is a lot of discussion about algorithms in financial sector and outside the financial sector, in many other sectors of the society, and how they influence our lives. And a lot of discussion has been done in the US, for example, on the impacts of Facebook and YouTube in the elections of the US. So a lot is going on here in terms of financial sector, not only for improving the services and also the management of financial institutions, but also can be used, and it's being used by financial supervisors to improve their work. So this is machine learning, and it's not exactly a new technology, but it's a technology that became more important lately because of the availability, the growing availability, and the continuous growing availability of the data with the 3V that I mentioned before: high velocity, high variety, and high volumes of data than ever before. So the second technology here would be the cloud. So the cloud is also not a new concept, but its importance has been growing lately, also because of the availability of data, but also because of the increasing connectivity in the world. So the whole world now is connected to the internet. So the cloud computing is increasing in importance. Why is this even in this slide? Because it sounds like old stuff. It's actually to highlight the importance of the cloud and the cloud computing services to fintech industry. It's not only important for small fintech companies that need the infrastructure, do not have the money to invest in infrastructure to store data, but also the cloud computing services nowadays, they offer much more than infrastructure. They can offer software, they can offer applications too. So that's why many of the fintech companies, the startups that, when we think about startup companies in the fintech sector, we might think about people in their garages or people in coffee shops. They are usually and most likely using cloud computing services that are provided by third-party companies, and that reduces the cost of their service immensely. So the cloud computing services are essential for innovation in financial sector. I'm highlighting this because I talk a lot to regulators and supervisors around the world, and many of them are actually afraid of the cloud. So they're afraid of allowing cloud computing, or if they do allow, they allow with limitations such as not allowing cloud computing outside the country. And what they should be doing is actually allowing the cloud, but based on standards for data security. So it doesn't really matter if it's outside the country or inside the country. The other technology that it's very important for fintech nowadays, it's the APIs. So the APIs are definitions, protocols, and tools that specify how different software should interact. And this is very important for partnerships between fintech companies and financial institutions. For example, the easiest way to understand this is to allow these fintech companies to access client information in banks or in insurance companies or other types of institutions to provide extra services. So there are a lot going on here in terms of innovation using APIs. And you can see that everything has to do with data and how the data is moving or being accessed by different actors. And the data in the end is data about consumers and data about behaviors and data about financials of the consumers. So APIs are really, really key for partnerships. And the people in Europe, or the people who are looking at Europe, they are just going towards the implementation of the open banking regulations, which require banks and financial institutions to allow access by third parties to their client information. So I think I need to go a little fast. I have a lot of slides here, but let's try to go fast. So the Internet of Things is another revolutionary way to do business nowadays. So you connect devices all over the world, and by doing that, you have limitless mobility, limitless data collection about consumer behavior. So you have cross-border data flows, and you might have, and you do have, devices operating without human supervision. So this has a lot of potential to create businesses in financial services, but also has a lot of questions around data privacy, cybersecurity, and potential for people to abuse those devices connected to the Internet of Things. And last, the technology that the most really probably disruptive technology is the distributed ledger technology, DLT. So DLT sometimes is mixed up with the term blockchain, but they are kind of different things. You do have blockchains in most DLTs nowadays, but there are many different models. Of course, they are based on the ideas that Bitcoin started with many years ago, but it's not all about Bitcoin, it's not all about cryptocurrencies. There are many potential uses for the DLT technology. So within and outside of the financial sector, you have smart contracts, digital currencies, many potential applications for public registers, including birth certificates and other types of registers. The potential to really streamline trade finance and corporate ledgers. So it's really one of the most disruptive technologies. And the pilots are actually getting out of the pilot phase and going into production around the world. So what is the impact? What does all this mean? And I want to make you another question. So do you feel confused, or do you think regulators feel confused in this environment with everything going on? You can use the chat box, the Q&A box. Yes. I see some yes coming. Yes, confused indeed. Somehow confused. So much information. Yes, exactly. So that's really how most of the supervising regulators I talk to feel. And I sometimes feel confused too, especially when we're talking about technology. And the challenges for the regulator, it's really about first understanding what's going on. So it's very difficult to understand what's going on sometimes. It's to understand the technologies, but also to understand the broader implications for your goals and objectives. And then if you understand the implications, it's difficult to balance your different goals and objectives as a regulatory and supervisory agency. And finally, if you have that kind of balancing between objectives, it's also difficult to juggle priorities. So you have limited resources and you think that there is a priority there is a priority to understand what's going on, but you have no time or no resources to, for example, create a FinTech or innovation unit at your regulatory agency, as many agencies are doing. But to help you navigate this environment, it's useful to again deconstruct the innovation flurry into its components. So new products and services have different and specific regulatory and supervisory implications. The new businesses also, the technologies being used also, and a lot of implications in regulatory terms related to the data and the new data uses in financial sector. So let's talk about a little bit on these elements. So should you regulate FinTech companies and products? This is a question that a lot of regulators are asking themselves, and they are trying to come up with new regulations, such as on crowdfunding, on FinTech regulations, robot devices regulation, P2P platforms. And many times these new businesses or new products do not fit the existing regulation. So regulators do feel overwhelmed, and they think they have the need to go ahead and regulate these businesses. Also, the problematic aspect of this new business model is that the financial sector value chain is changing, is fragmenting. So you have specialized institutions doing parts of the job that in the past were all done by banks or big insurance companies. So the lines of responsibilities have become a little bit fuzzier, and that has implications for licensing and for also supervision. On banks, the fintech revolution has a lot of impacts. For example, when they do partnerships, when they invest in fintech companies, when they compete with fintech companies. So they do all this, they compete, they invest, they partner, and all this can change the risks of the banks too. So in the end, maybe fintech can have systemic implications in a jurisdiction because of these relationships between fintech and banks. And this is just a Deloitte research talking about the priorities for banks in the next years, given the fintech revolution that is going on. So they say that regulatory recalibration on compliance, using technology for compliance is very key for banks, managing their cyber risk because of this interconnectivity over the internet, the flow of data, and manage technologies. And then compete with fintech and big techs. So big techs are the ones that the big names of the fintech world are not only also things that are not fintech before, like Facebook and Google, they are going into the financial sector, but also big names such as Alibaba and finance in China. So big things for competition, but also for partnerships. And there are many regulatory issues on the underlying technologies of fintech. So for example, we do not have time enough today to talk in detail about the regulatory implications of distributed ledger technologies, but some of the questions are these ones. For example, who is liable in a network, in a decentralized network? If there is no central trusted counterparty, who is actually liable for the problems that happen in that network? If the blockchain is a chain of immutable, it's an immutable ledger, how do you reverse transactions if the transactions need to be reversed? And also that is the other side of that is if someone abuses the system, how do you reverse the abuse of the system? So there is a lot of regulatory issues in digital in distributed ledger technologies. There is also the issues on the algorithms, for example, the biases and failures of the algorithms in machine learning. There is the issue of whether supervisors should regulate and supervise and monitor and assess algorithms. There are the many issues in cybersecurity, also related to data management. Who keeps the data? Who owns the data? Can the data cross border? Who is looking at the data protection when this data is actually going outside the borders of the countries? So a lot of data protection and privacy issues. But not everything is challenges. There is a lot of opportunity too. So this is one of the main reasons why we're doing this webinar today, is to think about the opportunities, not only the challenges and the problems that the fintech revolution is creating. So in fact, the same technologies can actually, you can use the same technology in your own benefit. So because they can help the industry improve compliance, improve risk management, the same technology can help you improve your supervision and also even your regulatory process and the policy making, all based on the same technologies, which are for example, machine learning and the data, the flurry of data and the variety of this data. So two issues of the fintech industry that are very important for financial regulators and supervisors are RegTech and SupTech. So let's start with regulatory technology of RegTech. So there is a lot going on there. It's a very fast expanding market, and International Institute of Finance, IIF, defines RegTech as the use of technology to solve regulatory and compliance requirements more effectively and efficiently. So this is a very broad definition which can say a lot. So it's not only about complying with regulatory requirements, specific requirements, but also changing the way that institutions manage their risks, so generate risk data and comply with regulatory requirements. So a few use cases for RegTech that are being offered today by RegTech companies or vendors, which can be small or large, which can be startups, or which can be very well-known and global consulting companies. So you have regulatory compliance and reporting. There's a lot going on in terms of improving the reporting of the data to financial supervisors. Risk reporting to comply with the Basel Committee requirements in the document 239 about risk data aggregation and reporting. And that implies a lot of changes in risk management. So some of the solutions are focused on certain aspects of risk management, such as anti-money laundering and counter-financing of terrorism, KYC applications, KYC utilities, which are shared utilities done either by governments or by financial institutions to improve the anti-money laundering and counter-financing of terrorism measures. There is a lot going on in trading in financial markets by these RegTech solutions. And I think there's going to be a flurry of new offers in automating procedures at the financial institutions with the objectives of saving costs. So in terms of supervisory technology, so actually this is a term that not many of you might have heard. So just for me to have an idea, have you heard about the term SupTech before? So most people are saying yes, no. Now most people are saying no, kind of half-half. Because many times the term RegTech is used also for solutions focused on the supervisor, not only on the industry. We are using these two different terms here just to make it easier to understand that a niche of the FinTech market is focusing on solutions for the industry, and a niche is focusing on solutions for the supervisor. So what is SupTech? The concept is the same. The concept is getting to the Tom Cruise environment. So you can imagine yourself with this very cool screen, making decisions there, looking at data, moving the data with your hands. We might be still a bit far away from that, but at a minimum, SupTech solutions nowadays, they do provide you opportunities to improve at least the data that you use. The data is really the core of supervisory procedures everywhere. And there is a lot of problems in data for supervisors. So at least better data collection mechanisms, at least better data analytics. You can do that with what is being offered today. Also, you can go and think about automating some compliance checks with simple regulatory requirements, and also automating some reporting, some internal reporting, such as inspection reports or some other analytical reports that can be done by machines rather than by humans. Another thing, an area that is being developing nowadays across many supervisors, they're thinking about it and some are piloting, is how to use unstructured data, such as big data, or the data that is sitting on PDF files or even hard copy documents at your agencies. So new data collection mechanisms, this is really the first step for any supervisor who wants to think about how to use technology to improve its own procedures. It's to start with improving the quality of the data. So there are many things going on there. There are many solutions being offered and some new approaches, such as the input approach, which is what the Austrian central bank is doing, the pull approach, which is actually the supervisor pulling the data from the financial institutions and then transforming that data, and the APIs, which is it's a similar concept, but you not necessarily pull the data. You actually, the API transforms the data for the financial supervisors using the analytical formats that the supervisors want. So there is no data flowing around. So these are new approaches, and one of the most talked about approaches and new systems of data reporting is of the Austria Central Bank. I just want to have an idea if you have heard about this new system by the Austrian Central Bank. Let's see how many people have heard. I have not. So most people have not, the large majority have not heard. Unfortunately, we do not have a lot of time, but what the central bank is doing in Austria is to getting rid of all the reporting templates. So, you know, these traditional reporting templates that each department creates when they want new data, they are getting rid of this, and instead, the central bank is collecting cube data. So data cubes that are based on granular, highly granular data, and there is no template. And that means when the reporting requirements change, there is no need for implementation, changing systems at the financial institutions. And so that reduces cost. And the rapidity of the implementation of these changes is much better. And the time to report, the time between the cut date and the reporting of the data has reduced a lot in Austria. A similar system is being used in Mexico by the pensions regulator. So the pensions regulator has a lot of granular data, and similarly to Austria, they have a third-party company which is collecting this data and making this data available to the supervisor. So the idea of the improving the data is not only improving the data that you get, but also improving the analytics of this data. So it's moving from the descriptive analytics to prescriptive. And that means moving from describing what happened to finding out the actions based on the descriptions. So most supervisors, when they are adopting technology nowadays, they are actually focusing on the first step, on the descriptive analytics. But technology nowadays actually allows you to go up in this ladder. So what if you could forget about how you do things today and actually think that if I start my regulatory agency tomorrow, could I do things differently? And this is what technology allows you to think about today. What if the agency started yesterday with the technology of today? So you could think, for example, about automated and real-time supervision. So you would be accessing the data at the financial institutions and actually doing some enforcement actions or corrective actions automatically. You could think about machine-readable regulations where these documents, these regulations would not be in PDF, lawyerly language, it would be in computer language that the computers of the financial institutions could already execute. So these are concepts for the future, but there are regulators and supervisors out there researching these concepts. What about using big data for your supervisory purposes, such as looking at the consumer behavior based on likes on Facebook, for example? And the last thing to think about is with the evolution of digital, the distributed ledger technologies and blockchain, would you as a supervisor be a node, a participant in a distributed ledger technology? So you would be having access to all the transaction data and being actually able to act on the permission of these new transactions before they go to the blockchain. So these are questions for the future, but questions that supervisors actually need to be thinking about before the future comes to their door. And how can you foster initiatives? So we have many types of initiatives that regulators around the world are taking. For example, the regulatory sandboxes, FinTech accelerators, FinTech hubs. Just last question, how do you get involved with any of these types of initiatives in your country? Are you involved in any of these? Let's see. I am. Most people, so it's kind of divided into I am not. I would like to be a few of them. I am, I'm not. That's the feeling that I have when I talk to regulators around the world. At least they're thinking about, for example, building regulatory sandbox, but also thinking about extra measures to incentivize innovation in their financial sector. So these are only ideas. There are many other things that regulators can do, but they usually need to have a mindset towards analyzing the innovations. And that requires leadership and mindset. So it's the right leadership and mindset. Without this, supervision cannot change, and financial regulators and supervisors, they would be just lost in a sea of change, right? It's a mindset change. It requires courage. It requires strategic thinking that sometimes regulatory agencies lack for many reasons, and also for sometimes actually it's lack of resources. So it's very important to have a strategic leadership. So to summarize the key points of this presentation before we go to the questions, I did go over my time. So first of all, the FinTech revolution does bring opportunities also. It's not only about challenges, but it's a lot of opportunities for the market, for consumers, and for financial supervisors and regulators. So the same technology fueling FinTech innovation can also transform compliance, can transform risk management, can transform regulation and supervision, even if you do not get to the point where you feel like Tom Cruise in Minority Report. And supervisors can go beyond just improving the data that they have today to really get to a next level of supervision, maybe real-time supervision, preemptive supervision, and participating in distributed ledger technology. And last, no breakthrough in supervision or regulation or policy making can be done without the right leadership and mindset. It's really a new world, and we all need to change our mindsets, get out of our comfort zones to be able to really face this sea of change in the best way. You're gonna have, I think we're gonna share two key resources. It's two Toronto Center notes, one on RegTech, SupTech, and FinTech, and also the other one on sandboxes. You can also go to the website on the Resource Center and find these documents and other very interesting publications of the Toronto Center. And of course, you can ask questions too. So thank you very much for your participation. Now we go to the questions. So where do I find the questions? So this one. So Edna asked for emerging markets. Would you prefer that we focus on FinTech or regulatory sandbox or both? Actually, they are not exclusive, because sandboxes, for example, it's a means for the regulator, for the supervisor to understand what's going on. So it's a good way for you to learn before you regulate or supervise. I would say that avoid trying regulating too early, otherwise you can stifle innovation. So another question is, yes. Are the international financial standard setting bodies providing adequate guidance on how to deal with FinTech? Which guidance do you find the most useful? So yes, so you probably know that standard setting bodies, for David, this one. Hi, David. I would say not yet. Why? Because you can always trust on the international standard setting bodies to give you broad guidance. And the broad guidance is correct, and it doesn't change with this FinTech revolution. So the last guidance that they came up with on the Basel Committee, there was a working group on FinTech, and there are many recommendations there. And mostly the main message is for regulators to learn before they act. So to learn the risks before they regulate and supervise. And that goes in line with the idea of testing and learning with sandboxes. So there is this guidance paper on FinTech. You can find it in the Basel Committee website, bis.org. Andy is asking about the DLT. So DLT seems like a perfect technology for data collection for supervisors. Is there a common view perhaps from the Basel Committee on how to achieve a common platform? Not that I know. Not common view. Kaylin, how can a regulator oversee properly property trading? Oh, algorithms to identify and address incidences of market manipulation. This is actually already being done by many capital markets regulators. So they are using algorithms to try to find market manipulation and frauds and act preemptively. So there are many documents out there and by the supervisors. So you can find, for example, there is a good speech by the SEC here in the US, not there in the US because I'm in Canada right now, about algorithms and how machine learning can help regulators to for market conduct. I have here, I don't understand the name, Thomas. What tools could be used to enable preemptive regulation? So first, you need to understand what's happening in the market, right? But your question is basically linked to machine learning, so artificial intelligence applications. There are some regulators, for example, the FCA in the UK, the Singapore Authority, Hong Kong authorities. So they are researching into ways of using machine learning for preemptive supervision and regulation. The two things go hand in hand, but of course they are mostly focused on supervisory actions. But then, of course, this can all inform regulation and policymaking. I have here guest 19. I think fintech regulators should require collaborative approach. Silo regulations might not be effective due to fintech borderless use. Yes, you're right. On many aspects, on data flows, on data management, on data sharing, but also on the fact that many innovations in the financial sector right now, they are based on bundled products. So these are products that they bundle different functions that usually traditionally were separated in silos in the financial sector. And that's one of the reasons why some countries have moved towards the Twin Peaks approach. So you would have a prudential regulator and then a market conduct regulator. So these are functions of the regulatory agencies, but all the products, types of products and providers are under each of them. So you would be able to catch bundled products. Another one, do you have any regulator on ICOs? Not that I know. Not that I know. Do you have any regulations in Canada or any other countries for fintech? Yes, there are many countries going and drafting and also passing regulations on fintech, either on broad fintech, which covers many areas, or certain parts of fintech, such as crowdfunding. So there are many countries that are passing regulations on crowdfunding. Why regulations on third parties, like wallet providers? So many countries have regulations that affect third parties that are not providing services directly to the clients, but services to financial institutions such as payment infrastructure or payments aggregators. This is very common in Africa, for example. These are third parties that not necessarily are regulated and supervised, but regulators are thinking about regulating them. I would say that first, not regulate and see if they actually need to be regulated. Because what needs to be regulated is actually the provision of services to the public, right? We need to go back and think about why regulate financial services in the first place. So if you have the reasons in place related to these third parties, then you need regulation. But mostly, most countries do not regulate third parties that are not. This is the same question. Chantal, what has been the overall approach to regulating cryptocurrency? None. So most people do not regulate cryptocurrencies yet. I think one of the reasons why they're not regulating is because they do not know how to regulate and do not know if it's necessary to regulate. So there are many discussions where the cryptocurrencies services fit. And there is not only cryptocurrencies, the product itself, but also the exchanges. So the exchanges, definitely, they are starting to be regulating across countries as under the securities regulator. But the product itself yet is not regulated mostly. Last question. Javier, Basel Committee. Basel Committee seems to be integrating new tech risks to prudential risk management framework. Does that mean that operational risk specialists have to become more IT, or are we just gonna be replaced? Gonna be replaced? No, I don't think it's gonna be replaced, but definitely I think there is a trend in the supervisory agencies to hire expertise, people who can understand these developments in technology so they can understand the risks. So if supervisory agencies lack this knowledge and skills, I think they're going to be lost. So they do need at least, a couple of people who understand the developments. Ferdinand, what are the main challenges to success cross-border remittances? Is there a need of regulation, harmonization for different interconnected hubs, or each country regulated hub? So all these questions on cross-border, they do require a heightened level of international coordination. So it's gone the time where national regulators can work on their own, because they can actually impact the services that are being offered to the public. One is data sharing about risks and increasing the trust between regulators in different countries. And there is a lack of trust in certain cases, which limits how much the market can evolve, because there is limited information sharing between authorities. So I don't think we're yet in the place where regulations will be transnational, but definitely this type of innovations, especially in the retail level, they will need some better coordination and information sharing between authorities. More questions? Yes? Thank you very much for participating. I really appreciate, and a big hi to all of you who I know. I know many of you, and I'm very glad you came. And looking forward to your questions over email. I'm available over email. And I hope you go to Toronto Center website and see the resources available there. Thank you. Have a good day.